Have you ever wondered what an HSA is? Are you eligible? What are the tax benefits? Well, my name is Ashley, and in this video, I'm going to give you the scoop on what you need to know when it comes to HSAs and whether this would be a good tax strategy for you. So why is an HSA so great? Well, it comes with a triple tax advantage when you or your employer make contributions to your HSA account, along with many other great benefits. So if you're looking for ways to reduce your tax bill, this might be a great strategy for you. Let's dive in. So what are the triple tax advantages when it comes to an HSA? Well, the first, any of your contributions that you make to an HSA are tax deductible, meaning that it directly reduces your gross income on the first page of your 1040. The second is that any contributions that remain in your HSA, they grow tax-free. It's very similar to a Roth IRA. Money stays in there, and you earn interest on that money, it's yours for free. Third is that any of the distributions that you take out for qualifying medical expenses, you're not taxed on it at any age. You can take it out at any time. You don't have to be a certain age to pull it out. You can put money in there, basically just use it as a debit card and pay for qualifying medical expenses like co-pays, prescriptions for either you, your spouse, or any of your qualifying dependents. So what are the other great benefits that come with an HSA? Well, there's 4 that I'm going to touch base on. The first being that any of the contributions that you make to an HSA remain in your account until you use them. So it's not like an FSA where if you don't use it, you lose it. An HSA rolls over each year. So you can make contributions for that tax year, get a tax deduction for it, and not necessarily use it for qualifying medical expenses in that year. You can use it in future years. And the money that remains in your account grows tax-free. The other really cool thing about HSAs is that as long as you qualify to open an HSA, anyone can open it. So you don't have to be an employer, you don't have to be a business owner, you can be a regular Joe who receives a W-2. As long as you're eligible for an HSA, you can open one. The third great benefit that comes with HSAs is the deadline to contribute to your HSA is when your 1040 is due. So you don't have to make it by 12/31 of that tax year. You have some wiggle room to make some contributions to your account. So you have until April 18th to say you opened one, you contribute to it by April 18th. You can get a deduction for it. The fourth benefit with an HSA is, unlike credits and deductions, there aren't any phase outs or limitations based on your income level. So no matter how much money you make, your deduction for an HSA on your taxes is not going to be limited in any way. And it doesn't matter if you're married, if you're single, if you have kids, or if you don't have kids. Anybody can open an HSA and get a tax deduction for it as long as you're eligible. So how do you know if you're eligible for an HSA? Well, to be an eligible individual, you must meet a few requirements. The first being is that you have to be covered under a high deductible healthcare plan. And the IRS defines this for 2021 of a deductible of at least $1,400 for individuals and at least $2,800 for families. You also must have an out-of-pocket maximum of no more of $7,000 for individuals and then $14,000 for families. The other requirement is that you cannot have Medicaid. So if you have Medicaid, you wouldn't qualify for an HSA. And the last requirement is that you cannot be claimed as a dependent on somebody else's tax return. So if somebody else claims you as a dependent on their tax return, you are not eligible for an HSA. So how can you use your HSA funds? What is a qualifying medical expense? Who can use these funds to pay for qualifying medical expenses? Well, I'm going to jump right in. Let's start with what is a qualifying medical expense. A qualifying medical expense is things like co-pays for your doctor, your dentist, your eye doctor. You can use it to pay for prescription drugs, contact lenses, eyeglasses, if you need dental exams, if you need braces or fillings, things like that. So as far as who can use these funds to pay for qualifying medical expenses, it depends on how you have your high deductible healthcare plan set up. If it's a family high deductible plan, your spouse can use it and your dependents can use it as well. So one thing that's very important to note is the things that it does not cover. It does not cover your monthly healthcare premiums that you pay each month, and it does not cover anything that you buy over the counter that wasn't prescribed to you by a doctor. So things like ibuprofen, Tums, things like that are not qualifying medical expenses. So what are the annual HSA contribution limits, or the max tax deduction you can get for contributing to your HSA? So each year this changes due to inflation, but for 2021, anyone that has an individual high deductible healthcare plan set up can get a max deduction of $3,600. So that's the max you can contribute to your HSA is $3,600 if you're set up as an individual. If you're set up under a family plan, a high deductible healthcare plan for families, the max contribution that you can put is $7,200. Also, one thing to note, if you have your high deductible healthcare plan set up by December 1st of that tax year and you open up an HSA, make contributions to it, you can get the full deduction for your HSA account if you have it set up by December 1st. Well, that wraps it up for HSAs, but if you have any additional questions about HSA accounts, feel free to reach out to us at Halon Tax by clicking on the link in the description below. We strive to help save small business owners on taxes. We'd love to chat with you about this tax strategy. That's it for the video. My name is Ashley from Halon Tax. If you enjoyed this video, please like, comment, and subscribe, and check out our other videos on different tax strategies that we have that could save you money in taxes. I look forward to seeing you in the next video.